Today we will talk about the American manufacturer of electric vehicles, Mullen Automotive, its history, financial aspects, and we will take a look at the stock price and try to understand for ourselves whether it's worth considering Mullen as part of your investment portfolio. The company owns several complementary businesses, including Mullen Energy, devoted to developing battery technology and emergency point-of-care solutions, and CarHub. This digital platform uses artificial intelligence to provide an interactive solution for buying, selling, and owning a car. The company is currently working on a mid-size sport utility vehicle, the Mullen 5, a full electric SUV. Also, the Mullen Dragonfly electric high-performance sports vehicle is another project being worked on by the company. According to BCG analysts, battery-powered electric vehicles are expected to account for 20% of all global sales by 2025 and 59% by 2035. Also, by 2030, the United States President's goal of 50% EV sales should be achieved. Manufacturers of electric vehicles like Mullen Automotive are anticipated to profit from the demand increase. On the other hand, Mullen has seen a challenging 2022, with the stock losing 96.1% of its value year to date and 97.6% over the previous year to conclude the most recent trading session at about 19-20 cents a share. The Mullen 5 pre-orders for Mullen's strikingly different EV crossover tour were greater than anticipated. The business said on September 8, 2022, that it had acquired a 60% controlling stake in Bollinger Motors, a pioneer in electric truck technology. The purchase will aid Mullen's entry into classes 3 to 6 of medium-duty trucks and B1 and B2 of sport utility vehicles. Mullen declared reducing $13 million in corporate debt on November 2, 2022. The corporation decreased its debt from more than $30 million last year to an estimated less than $10 million. A portion of the $150 million that Mullen got, which it reported it had to go on November 17, 2022, will be used to liquidate ELMS assets and speed up the manufacture and delivery of electric vehicles. This year, automotive demand has been impacted by rising prices, supply chain disruptions, and persistent chip scarcity, although it rebounded dramatically once the pandemic restrictions were lifted. However, this year's skyrocketing gas prices forced many would-be automobile purchasers to switch to electric cars, since the cost of operating gasoline-powered vehicles increased significantly. The numerous supporters who purchased the penny stock, expecting it to develop into the next Tesla, however, are unsatisfied with Mullen's most recent actions. Bulls frequently claim that David Mitchell, the CEO of Mullen Automotive, is the next Elon Musk. However, the business has been in startup mode for the past 10 years, since it is yet to mass produce a consumer vehicle. Following last week's news of a resale of up to 220 million shares of Mullen Automotive stock, the stock price has reached a new 52-week low of 20 cents. Only convertible notes in the common stock will be sold at the resale, so Mullen will not get any money when these shares are sold. The corporation made a third change to its stock purchase agreement in November. By that modification, investors like AUSA Holdings would pay $150 million to acquire convertible notes instead of warrants, and Series D preferred shares. These notes on November 21st, 2022, or at any time at the discretion of the holder, can be converted to Mullen shares. This indicates that these notes may have already been converted into Mullen shares. The investors will additionally get warrants exercisable for 185% of the common stock obtained for every share of common stock acquired for the conversion. However, it appears that Mullen will continue to get increasingly diluted. On December 23, during the company's next special meeting of stockholders, shareholders will decide whether to approve a reverse stock split and raise the number of authorized shares from 1.75 billion to 5 billion. The short interest of hedge funds and markets has increased to an all-time high, the highest the stock has ever seen. There are currently about 194 million shares on loan, which is about 60% of free float. This increase in the short interest rate showed that some hedge funds are positioned to keep the Mullen stocks at lower prices. From a technical analysis view, if we look at the charts, we can see that since October 25th, the price of Mullen stock has been declining, notwithstanding a brief recovery period in the early half of November. Mullen stock has lost about 22% in only 5 sessions. The share price of Mullen has fallen below its opening price for 10 straight days. Mullen is trading below its 50-day and 200-day moving averages of 34 cents and $1.05 a share, indicating a downtrend. Although the company has reduced its debt, it is still far from profitability, as its Mullen 5 vehicle is slated for delivery only in 2024. Despite the bright prospects of the electric vehicle industry, Mullen is unlikely to capitalize on this growth due to its poor financials and weak profitability. Also, please keep in mind, we do not give any investment advice. We look at the numbers and we present them to you. Any investment decision is up to you. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukas Copy TV. Remember, money can take care of you. It cannot take care of itself.